Hello guys. Hope everyone is good. Guys, I've decided to do a trade breakdown on GU on entries I took on Monday. I asked, I asked Ezra if it's okay if I recorded a video doing a trade breakdown instead of a mere screenshot. So he gladly said it's okay. So guys, without the waste of any time, let's get to it. It's a 65R risk to reward. Risk to reward trade. The first trade was closed at 1:35, and the second one was closed at 1:29. But honestly speaking, along the way, partials were closed. So guys, I'm going to start from hard time frame, sharing my entire thought process. So guys, I considered this bullish order flow after the break of this bearish order flow. Yes, you see this supply zone is the one that sponsored the break of the structure and this impulsive moves to the downside. So you see this high, low, high to the upside. So this move right here, this bullish order flow, it's a internal trading range, or it's an internal structure. So I expected a deeper retracement before the price continued to the upside, and I also expected the manipulation of this trend line. So guys, yes, the price did sweep a little bit to the upside, but I consider these relative equal highs. So I expected the price to react of this demand zone, this one, because I saw the price was starting to accumulate, manipulating this momentum trend line. And another thing, guys, before I continue, the form of liquidity that is mostly used are trend lines, and I've seen that happening a lot. So I expected the price to react off of this demand zone since it started to accumulate. I didn't see the need for the price to go below this point, but then again, we react to do not speculate. So after the price broke this 4-hour point of interest and closed below, I expected the price to go on and react off of this demand zone, because you see this demand zone is the one that sponsored the break of structure. You see this bearish order flow, the markets have been bearish for quite some time. For this demand zone to take out this supply zone, this is a significant demand zone. But then again, we follow the price, we react. So after the price broke the structure to the upside, that's where I saw that the market is going to continue bullish, because it was confirming this accumulation. And you see, after this accumulation, the price started to create this bullish order flow to the upside. And at this point, our accumulation was confirmed because this is an SOS. So simultaneously it's reacted of this momentum trend line and this momentum trend line. So like I said, trend lines, they are mostly used liquidity. So let's go to 15 minutes. You see this bullish order flow. Sorry, before 1 minute is 1 hour. You see this bullish order flow. And at this point, lots of people were buying. You see, that's where these two high time frame momentum trend line met. So a lot of people, the markets rejected. So a lot of people were buying, and there were these equal lows. People who are trading double tops or double bottoms, they were buying at this point. So I knew I had to buy below. So I had this, it's a 1 hour point of interest, and the second one below. So I had to wait. Remember guys, we started from high time frame. We do not just simply enter blindly. We have to build our case. We have to build our convincing case. So after the manipulation of the trend line, I saw the price started to accumulate. Around this area. But our accumulation wasn't complete. So we waited for the price to react on a second point of interest. So the price started to accumulate, you see, as it reached our point of interest. And we waited for our accumulation to be completed. So you see, this is the first trend line manipulation. You see, the price continue creating this bullish order flow. So my first entry was taken around this point. This M1 point of entry. You see, this is a nice demand zone, and this demand zone swept these equal lows. And another thing, guys, to mention time and price. Time, price, liquidity. Especially during London session, pre-London and after, and actually during London, because Frankfurt, London, then New York. You see, we have these equal lows, and we have this trend line liquidity, and people are trading trend lines. They buy when it's bounced off the trend line, they sell if it breaks the trend line. But I knew I had to buy below. I had to buy in this point, M1 point of interest. So I placed my entry around this point. And guys, after the price manipulated this downside liquidity, remember, lots of people thought this was a breakout structure. They were selling around this area. They were manipulated to the downside and they manipulated to the upside. So my second entry was based off of this M5 point of interest. This one, it was a pending order, the first one. The second one, It was a market execution. So I waited for a price to tap. You see, every demand zone was mitigated. This demand zone was mitigated by this candle. Only this one was left unmitigated, then they were imbalanced. So after this rejection, I placed my entry at this point in my stop loss, giving me 3.5 pip stop loss. Let me check. Yes, 3.5 stop loss. The first one was 4.8 pip stop loss. So after I took these trades, I waited. You see this trend line. I knew it, that they had to manipulate. They had to manipulate it. And another thing I like to see, for me to hold my trade, you see there is this trend line to the downside and there's this trend line to the upside. So for me to hold the trade, I have to see the price manipulating upside liquidity, inducing people. You see, it created this liquidity below and broke this trend line. People were buying at this point, and it gave this reaction. You see, this reaction with this bullish engulfing. I knew it, that I had to buy below. So I waited. I expected the third entry around this area, but unfortunately it didn't trigger. But I had these two, so I waited. Guys, I'm going to show you if what I'm saying, that the form of trend line is mostly used as trend lines, form of liquidity, sorry. You see, this first liquidity was manipulated. This is a second liquidity that is manipulated. This is a third liquidity that was manipulated. This is a fourth liquidity that was manipulated. And this is the fifth. This is a fifth liquidity that was manipulated. You see? And for me to hold my trade, guys, because another thing, trade management, it's another thing. It's really another thing. And guys, another thing I have to mention, I do get these good trades like this, but I'm not yet consistent. I spoke to Ezra. He advised me that I should trade less often and I should take high probability setup. I've decided to stop trading counter trend trading. So I had to focus on pro trend. And another thing, I do get trades like this, and most of my trades are common, guys. It's trend line manipulation. But sometimes I do enter. Let's say I enter around this area and I get swept before the price continue. That's another thing I have to study. And I hope Sir Ezra will check out this video and see my style of trading, and he will kindly advise me what to do. Because sometimes Like last month is February. I missed out on lots of trades. I think 5 or 6. They were not typing my orders. Some I was getting swept. So don't be fooled, guys. Like there are lot of losses after this trade. But again, the power of high risk to reward, because this trade it's 1:65, but partials were closed along the way. But then again, let's say maybe I closed 1:40. These 10 losses or 15 losses, still they recovered. Currently, I do not trade any live account. I'm practicing to trade prop firms, so I'm not rushing. I have to focus on my craft. I have to enjoy the journey. I have to learn, because guys, when you are trading prop firms with good risk to reward, you get nice results and financial breakthrough. It's quite easy. And okay, guys, before I close this video, let me share another one here. And this counter trend trade I tried, it's failed. But this one, you see this one, it had a 0.8 pip stop loss, and I targeted 20 pips. Imagine, guys, 20 pips, but 20 pips and a 0.8 pip stop loss, and it's 1:28 risk to reward. It's amazing, but I didn't actually took the trade. But it did exactly as I expected. Exactly as I expected. So guys, hope you'll enjoy the video. If you have comments, suggestion, and another thing, most of my trades that usually play out and to be a nice swing and a high risk to reward are pro trend. It's a relevant high time frame, like 1 hour, then I execute on 1 minute, then targets highs. They usually play out. The one that do not usually play out are counter trend trading, but I still have to master such entries, because I have to avoid to be swept. But I hope you guys will help. So yeah, enjoy, guys. Cheers.